Good afternoon. Let's talk some business. We're doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air and 790 KBC, streaming live online worldwide at kbc.com and your on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. We have a winner. Kick off the new week, another triple-digit move for the Dow Jones Industrial Average, and on the upside once again, with the Dow ending the day up 237 points, settling at 40,897. Its fifth straight daily gain. The S&P 500 popped 54 points higher, and it has now logged its longest winning streak since November of last year. And the Nasdaq popping 245 points higher for its eighth straight daily gain. All this coming off the best week of the year last week for stocks, which saw the stock market close higher again on Friday, booking the best weekly advance since last November. And the week before that was volatile and wild with a more than 1,000-point drop for the Dow Jones Industrial Average 3 Mondays ago. But that week ended with a little net change for the major averages. Since then, volatility has seen an epic slide. We will take a closer look at that VIX index, which has moved sharply lower. The Magnificent One, NVIDIA, has seen a jump of about 30% from the low point seen earlier this month, helped by a 6-day winning streak that has it's been the longest in about 5 months for NVIDIA. The Magnificent One closing at more than $5 today at $130 a share. This is quite a story here. British tech entrepreneur Mike Lynch among the 6 people missing after a super yacht sank off the coast of Sicily during a violent storm. The roughly 160-foot yacht named Bayesian was anchored near Porticello near Palermo, Italy. Mike Lynch, known as Britain's Bill Gates. The British tech entrepreneur Mike Lynch, 59 years old, founded software company Autonomy in the 1990s, which was bought by American tech giant Hewlett-Packard. Hewlett-Packard stock today has closed lower by $1.31 at $34.60. Harley-Davidson making news today, becoming the latest company to make changes to its diversity and inclusion efforts following pressure from activists. We see Harley-Davidson shares moving higher. They posted a letter on X, formerly known as Twitter, saying it's reviewing all sponsorships and affiliations and centralizing approvals to focus exclusively on growing motorcycling sports and retaining our loyal riding community. That according to a posting by Harley-Davidson on X today. Looks like we're seeing what's happening in the job market here. Investors are jittery about what's happening in the labor market these days. After the market was spooked by that weaker-than-expected jobs report, workers now feeling uncertainty, too. Americans are more pessimistic than they were just a year ago about their chances of holding on to their jobs, according to a new report out today from the Federal Reserve Bank of New York. Well, home sellers and home buyers watching what's happening in real estate these days with big changes now in broker commissions. Home sellers maintain that the National Association of Realtors' long-established rules on broker commissions resulted in excessive fees. National Association of Realtors agreed to pay more than $400 million in damages and eliminate its rules on commissions, resulting in the end of the standard 6% commission for U.S. real estate agents. We'll talk more about this and its possible impact on commercial real estate as well. I'll discuss all that with Jerry Sullivan, National Managing Editor at The Real Deal, which is the authoritative commercial real estate news site. The economy and tax policy front and center in the presidential race as the Democratic Party convention gets underway today. I'll discuss that and more with America's leading taxpayer advocate, Grover Norquist, the president of Americans for Tax Reform. But first, on your money, the markets, the economy, and the whole works now. Joining us live is money manager Ken Winans. Top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken Winans, author of numerous books, including Investment Atlas 1 and 2, soon to be Investment Atlas 3, by the way, also a Forbes magazine contributor. And most importantly, host of the new show here on 790 KBC, Winning with Winans, coming up this evening at 6 o'clock. Ken Winans, welcome back to the studio.
Well, thank you, Frank. And isn't it great that I finally get to be here on an up day?
That's right.
Oh, yeah, because you had me on the day when all heck broke loose. Now we're having some fun.
That's right. So we're up big since that big day a couple of Mondays ago, 3 Mondays ago to be precise, which you saw the Dow plunge at more than 1,000 points. It rebounded that week. Volatility spiked, and now that, too, has eased. Give us your view of this latest market action here.
You know, in the old days, they used to call it a panic. And then all of a sudden, when you have one really crazy cut, well, it wasn't even just one day, Frank. It went on for 4 days of just downside activity in the market. And then, of course, coming off a weekend and all that. But the problem is we're very quick to call something a bear market. And that's not a bear market. That's just simply a panic. But the simple fact that we've had what is now perceived to be a loosening in Fed policy, there's a lot of big things going on this week between the DNC. You have certainly the Jackson Hole Economic Symposium with the Federal Reserve there. There's just a lot of crosswinds. But at the end of the day, I actually think what really saved things and why things are even moving higher now, we can thank Walmart last week when they had that fantastic report. That set the stage, and there's more to come.
Retail numbers also came out last week. Walmart hit a record high on that news, and we're watching what's happening in that space now. What about the retailers here?
Well, we have several more coming out this week. Certainly one. I'm looking at the ones that I own: Costco, TJ Maxx. Certainly, you can look at some of the. Actually, it's kind of funny what to call them. Casey's General Stores. These are all retailers that have been powering ahead stock-wise and actually haven't skipped a beat all year. I think the numbers are going to be really great. What we're going to hear is they have figured out how to make money in an inflation cycle, and we're going to see it.
And speaking of inflation, just today I was in one of the drugstores and somebody walked right out without paying, right in front of the clerk and yours truly. And I asked her, "Are you going to do anything?" She said, No, we can't. And that's got to be inflationary. This happens all over the place here.
Well, it's interesting that people do not understand that the business needs to make money to survive and to grow. And when this happens, they're going to pass those costs on to the consumers who do pay, which, by the way, Frank, I'm living in Las Vegas now. That doesn't happen there.
You still get in trouble for doing that?
Yeah, let's just put it this way. They take law very seriously in Las Vegas.
Right, as they do in Beverly Hills, by the way. If you do something there, you're probably caught on video, and within 2 minutes, you're in handcuffs there. So it does happen even in this area. What happens after that is an open question, though. The Magnificent One NVIDIA, the Magnificent Seven, for that matter, coming to life in a big way. NVIDIA at 130 today, surprising a lot of people.
You know what? We're going to call it the tech yo-yo. That one stock gets talked about more. I don't know what I talk more about, that or Bitcoin. Those two seem to come up all the time. But look, at the end of the day, it had, as we know, a terrible hit. It's come back. The question is going to be, can it continue to produce those strong results going into the next earnings? We'll have to see.
So NVIDIA up more than 5 today at 130. Apple also rebounding big at 225, deuce and a quarter. 225.89 Remember the Electra 225 back in the day. So Apple here at this level. What about Apple here?
You know what? Everybody's talking about AI phones. AI. And Apple keeps bringing up that they are going to have that marvelous new phone with keyword, functional AI technologies within that phone. So if they deliver it, they'll be fine. What I have to say funny about Apple, Frank, remember when they came out with the goggles? No one even talks about them anymore.
Forgotten like yesterday's lunch.
They're just not discussed.
Right. All right, let's get to some of the exciting stuff here now. You have your crypto credentials too. So we see Bitcoin. Let me take a look. Around 59,000 here at the moment. Well off its all-time high despite the rally we've seen in the market. What happened to this relationship between the NASDAQ and crypto lagging the NASDAQ now?
Well, it doesn't go day to day, but what I have found, it goes quarter to quarter. Crypto did have a very strong bounce back, but what we're dealing with right now, I think that there are just such a huge demand or potential demand of a lot of new coins coming out that a lot of the Bitcoin investors are beginning to diversify. I'm of the opinion everything was fine until they started talking about having the Bitcoin. Once that started, it scared a lot of people, and I think ever since then it's lost a lot of its momentum.
All right, what about Ethereum? We got those ETFs for Bitcoin as well as Ethereum this year. Ethereum has also seen a wild ride right now at about 2,600 or so.
You know, Ethereum and Bitcoin are very different structurally. Everybody says they're the same. They are not. I would just say this, that again, it's part of that diversification scheme. that people are going to continue to move in a lot of different directions. And if people are too heavy in Bitcoin, they're going to look at Ethereum as a diversification play, or as I still think is going to be the unsung hero in crypto, is going to be the stable coin area, which I expect to, I actually think we will see a lot more stable coin ETFs being launched going into next year.
All right, what about some of these other altcoins, meme coins, or what have you? Remember, probably the biggest trade in the world, the most successful trade in the world was Shiba Inu, where somebody invested about $5,000, turned into $3 billion or something like that several years ago.
You know, Frank, I mean, I live in Las Vegas, and I guess you can find people who they go to various tables and various games, and they'll make money. I would just say be careful about a one-trick pony or a one-trick move in crypto without really following, is it sustainable? I think that's a big difference. Right now, if I had to make a big guess, I think Tether is going to be the next big move in crypto just because it is tied to stablecoin and everybody knows who it is.
On the air live with money manager Ken Winans. And speaking of bets, I guess a lot of betting's happening on the presidential election with the Democratic convention starting here. I'm looking at the Fox News headline here right now. It says, Comrade Kamala fails Econ 101. A lot of discussion about that over the weekend. Yes,
anybody in my line of work, you have to read a lot. And I read a lot of periodicals, and the comparisons to the 1970s. And Frank, if you remember years ago, I said the only thing we haven't tried yet in this whole mess with what happened since COVID was wage and price controls. Lo and behold, what did they come forward with that? Unfortunately, it had catastrophic consequences in the 70s. It won't work now. But the fact we're even discussing this stuff is actually alarming to me.
Right. And then, of course, President Carter had that tax on oil, too, right? The windfall profits tax.
Oh, yeah. Believe me, that's all on the table. But anybody who wants to study history, it doesn't have to be Democrat, Republican, independent. It's just economic sense. These things do not work.
Right, and we're on the air live with Ken Winans, who also happens to be a market historian with Investment Atlas 1 and 2, soon to be Investment Atlas 3. And, take a look back at those days and give us some more of the comparisons of what they're putting forth now.
Well, it's actually the comparisons are rather eerie. History never repeats itself, but it does rhyme. And the simple fact of the matter is when you had the inflation running out of control, which it's stirred up for the same reasons we have inflation today, too much money chasing limited goods and services. The Federal Reserve overprinted money. This is what we had happen then. That's what happened now. The problem is that when the government tries to mandate price controls, or they're trying all these, I just think regulatory remedies, they haven't worked before. And even other countries that have done it even much more draconian ways, like Venezuela, you end up with food shortages. You end up with shortages of very odd, weird things like toilet paper. It just simply doesn't work.
Right, and we're going to be talking tax policy later this hour. I see this afternoon. Kamala Harris says she would raise the corporate tax rate to 28% if she is elected. The corporate tax rate has been 21% since 2018. It would be the first hike in the corporate tax rate in more than 40 years. What do you think that would do?
I think the stock market itself, we would find that, profitability would drop. What happened in the 1970s is that the market literally went sideways for a decade. So when you try to do these kind of punitive things on business and on free markets, you can expect the stock market itself to start acting that way, which is be very lackluster performance, certainly would not keep up with inflation. And that's something we have to remember. We are in a stagflationary time, meaning that growth is not keeping up. Even with the inflation rate coming down, it's still not keeping up. It's one of the reasons that the Biden administration, when you look at performance on stocks, bonds, and housing, is going to come in at a very, very low scale, even amongst Democrats. It's just not a pretty picture.
All right, let me ask you this. The market got spooked by what happened in Japan 3 Mondays ago, and also that jobs report spooked the market, and recession talk was fueled by that jobs report. What's your gut feeling on where this economy goes from here?
Well, there's a lot of seasonality that goes into the job picture, too. I mean, here we are coming out of summer. There's a lot of summertime jobs that begin to disappear because vacation season's now over. Also, it's also geography. If in Las Vegas, you look at the job market there, it's generally very strong because, again, hiring costs, wage costs are generally lower. Places, blue states in particular, where they're mandating new things like $20 minimum wage for fast food workers, you can expect companies to lay people off. So it is there's no magic to what's happening here. Companies are trying to figure out a way to make money, and it's a problem when you have wages too high.
All right, on that important point, let me ask you the big question we ask on this program is, where are you putting money now and or taking it off the table?
Well, it's the one thing people do not talk about on your show, Frank, or for that matter, most of the other financial shows. When you have rates are certainly not going to go any higher. They're going to start coming down. Now, the debate is on how fast and how many rate cuts will happen. The good news is I think people should be looking especially at corporate bonds and preferred stocks as a place to lock in some good yields right now, because I don't think the yields will be this high at the end of this year.
All right, the Fed Chairman, Jerome Powell, this is going to be the big event this week. We'll be speaking at that big central banking policy meeting in the famous Jackson Hole, Wyoming, which gets attention once a year when all those folks are there. What do you expect to happen this week?
I actually think the Federal Reserve, even though I've been saying I didn't think there were going to be any rate cuts before the election, depending on what happens, you might actually see at least language change, meaning that we will cut this year, but we're not doing it yet. I still don't think there will be a rate cut in September. But again, Frank, rates are not going up, and that's the time to start looking at yield-based investments.
All right, hopefully we'll have a chance to talk more at 6 o'clock on Winning with Winans here on 790 KABC. But let me ask you, while we have the chance on real estate with this big change and the realtors' commissions, and in Florida they're having a meltdown there with high homeowner association dues and all that. And, of course, it's an issue here, too. But what do you see ahead overall on the real estate front?
Well, this thing that happened with the commissions is a very big deal, because when you go to Washington, D.C., and the very first lobbying block you come to on K Street is the Association of Realtors, for them to have to literally acquiesce on day before said, we are not going to cut this, we're not going to do anything. But I do think what's going to happen, it might actually help soften up things in real estate, make commissions be less of a factor, and therefore it might actually stabilize things.
Ken, fantastic to have you with us here. We look forward to doing more at 6 this evening. That's right, Winning with Winans coming up this evening at 6 p.m. I'll be on with Ken Winans this evening. We've been on the air live here with top-ranked money manager Ken Winans, CEO and Chief Investment Officer at Winans Investments, which you can find at winansinvestments.com. Ken, thank you very much for joining us here this afternoon.
Take care, Frank.
Thank you very much. And right after the freeways we go now on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. We are doing more at 4 here on Mottek On Money. Weekday afternoons at 4 o'clock. 790 KABC welcomes John Fogerty coming to the Pacific Amphitheater on September 3rd. Tickets are on sale now, and right now caller 9 wins at 1-888-790-5222. You can get a pair of tickets to the show if you're caller number 9. Call right now, 1-888-790-5222. Tickets furnished by the Pacific Amphitheater. We have a winner on Wall Street again today, another triple-digit move on the upside with the Dow 237 points at the closing bell at 40,897. The S&P 500 at 54 at 5608. And the NASDAQ powering up 245 points, 17,877. The yield in the 10-year note now at 3.88%. Taking a look at the cryptos now, we see a Bitcoin up about 200 at 59,240. Ethereum up 9 at 2,625. Among the winners today, NVIDIA up more than $5, up $5.42 to $130 a share. I had to do a double take on that one, but yep, that is correct. Apple shares down 16 cents at $225.89. Google, Alphabet is the parent company of Google, up nearly $4 today at $166.67. And getting back to the cryptos for a moment, Doge at the moment at 10 cents. And now the latest news for you here on 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. It turns out a record number of home buyers backed out of deals in the month of July despite lower mortgage rates. According to a new report out today, about 59,000 home purchase agreements were canceled in the month of July, according to Redfin. That number is about 16% of homes that went under contract that month, by the way. Of course, a lot of changes happening in the residential real estate world, with the home sellers maintaining that the National Association of Realtors' long-established rules on broker commissions resulted in excessive fees. Now, the National Association of Realtors has agreed to pay more than $400 million in damages and eliminate its rules on commissions, resulting in the end of the standard 6% commission for U.S. real estate agents. The aftermath of that groundbreaking decision expected to have a big impact on residential real estate and how the business conducts business. And while it's a residential-based settlement, the looming question among commercial brokers and commercial industry participants is whether it could also have an impact on commercial real estate broker fees and transactions in the future. Joining us live now, an authority on all this, Jerry Sullivan, National Managing Editor of The Real Deal, the authoritative commercial real estate news site. Jerry Sullivan, thank you very much for coming to the line this afternoon.
Absolutely. Good to be here, Frank.
Likewise, always appreciate your updates on commercial real estate, which, of course, has been getting most of the attention this year, but now this big ruling on residential, and might it also impact commercial real estate?
Yeah, it won't, unless somebody wants to try and pick this up in a similar vein and apply it through some other means to commercial. And the reason I say that is this was essentially a challenge that was based on the MLS, the multiple listing service. And that's very much a residential real estate entity that's traditionally been controlled by the Realtors Association. And so it's very much a residential case and instance. And the settlement in the Sitzer-Burnett case, which touched all this off, is very much focused specifically on residential.
Right, and you are focused on commercial, of course, and that includes office, retail, industrial, and multifamily. It's certainly a lot to talk about in the commercial real estate world, especially with the kind of big discounts we've been seeing lately with commercial real estate transactions here in the Los Angeles area. Maybe give us an update on what's happening here.
Yeah, and I think there's all kinds of interesting tea leaves to read in Los Angeles downtown specifically. A good one would be the offer that the county has put in for the county of Los Angeles has put in for the gas company tower right at the foot of Bunker Hill. And if you look at that, Frank, I think it runs about 135 a square foot. And, that's a Class A building. I mean, that goes back to Rob McGuire and, that phase of downtown's development. And, it's quite a bargain based on historical standards.
Certainly, and these towers there in downtown have been selling for a lot less lately than their previous purchase prices, right?
Yes, that 100 from 100 to 150 a square foot. We've seen them everything from the Aon Center to the 777 South Fig, and now this gas company tower, and that's you're talking about less than half of peak. I think a good deal less than half, as I recall. And I think you're going to continue to see it. I think one of the instructive things about this deal is the county is saying we can buy it and move the Hall of Administration, which I guess is an older building, and they'd like to move out of there and relocate all those county offices. And then the plan would be to tear down the Hall of Administration and turn it into a park or leave it open in any case. So, that's where I think the big tea leaf here is that you're now beginning to subtract from the inventory of built environment in downtown Los Angeles. And I think, you're going to have to see more of that because by any measure, it's an oversupply, gauging what we're likely to see going forward.
And all of this, of course, coming out of the pandemic and the slow return to the office, if at all. In all this, though, as you reported in The Real Deal, your authoritative commercial real estate site, L.A., at last check, leads the world in commercial property deals. Is that still the case?
I suppose you could make that case based on some measure or another. I'd be careful with that sort of stuff. I'm sure there are markets elsewhere doing deals at a rapid clip. So, there's all kinds of ways to slice and dice that data.
Yep. A lot of action here. A lot of action here for sure. And what about what's happening with office? Obviously, downtown still has its issues, but Century City, for example, seems to be packed.
Century City seems to be doing awfully well. And, there's been the story of the flight to quality. And, there's been some skepticism about that, but I think, Century City bears it out. So, that is a Class A office segment over there, sub-market of the broader region, and, known for high-end service, lawyers, financial companies. And that all seems to be working over there. And I don't think there's any doubt about that. So it certainly would seem to substantiate the trend of flight to quality.
All right. There was some talk already a few months ago that maybe commercial real estate has bottomed out. Is that still the case? And I see one recent survey indicates that commercial real estate distress is still expected to rise before the year is over.
Yeah, I would say in Los Angeles it has not bottomed out, at least speaking specifically of downtown. I think downtown still has a ways to go. And, I do think that there's going to be more instances of some older buildings simply, getting to the point where even you can't make the price work. And there's just time to pull the building down and leave that space open, at least for now. And I think that's going to have to play out, and that's going to take a long time. Kind of a grinding process. So other markets are different. I happen to be up in San Francisco right now. I think San Francisco did hit bottom and has begun to get its feet back under it. Still a lot of bargains to be had in San Francisco, as there are in LA. But San Francisco's a considerably smaller market, and so I think and they got started a little early. I think they faced their problems a little earlier. I don't know that Los Angeles has yet to really square up on its problems, a lot of the problems facing its downtown market. And so I would expect it to play out faster in San Francisco and LA take a little longer.
We're on the air live with Jerry Sullivan, longtime business journalist here in Southern California, now national managing editor of The Real Deal, the authoritative commercial real estate news site. What about retail? Of course, in San Francisco, we saw the reports there of a lot of places closing down due to crime and homelessness, as is certainly the case here in the Los Angeles area. What about retail?
Retail is very interesting because, before the pandemic, retail was considered to be ailing. And then, at one point when the pandemic started, everyone just pretty much figured, brick and mortar retail was over. To some degree, things like traditional malls, a lot of them have gone out, more will go out. And by that meaning they'll be closed and redeveloped and into something else. But retail overall is showing a lot of resilience. It's actually a bright point. And, right now, retail is more valuable than office. And if, you told someone that in 2019, I think they would have thought you were crazy, that in 5 years, retail will be more valuable than office. But that seems to be the case now. I'm seeing, San Francisco, again, has vastly improved since in the last 2 years. It really hit bottom during the pandemic. But, it feels much better now. It's not perfect. There's a lot of work to do. The downtown area still needs some traffic, but the base is much improved, and you can walk down the street and, feel a little more at ease, and you're starting to see the retail fill in, but there's still, a lot of vacancies.
What about industrial? For a while there, the sky seemed to be the limit. Has that cooled off now?
It's cooled off. I did, we ran something, I think last week, about the fact that the Inland Empire remains, the leading market in the United States. And I think was the data that we were considering. And again, a lot of data out there, a lot of ways to consider it. This had to do with big leases, like more than 1 million square foot. And the Inland Empire landed more of those than any other market in the United States. I think Dallas-Fort Worth was second. And so, yeah, it's cooled down to reasonable, or, it's probably still a hot market. It was white hot for a while during the pandemic, and that's cooled down a bit, but still a very strong fundamental market.
Absolutely. Industrial always big out there in the Inland Empire, and many discussions there with NAIOP, the big industrial real estate group out there in the Inland Empire. And And certainly a lot of action there. And, of course, L.A., last check, still is the largest manufacturing region in the United States. So when you fly into LAX, you see all those big box warehouses down there reflecting that. Jerry, thank you very much for that thorough update. As always, Jerry Sullivan, National Managing Editor of The Real Deal, the authoritative commercial real estate news site. Thank you very much for taking the call this afternoon.
Thank you, Frank. We'll talk again soon.
Looking forward to it. Thank you very much. And right out to the freeways now on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. The economy and tax policy front and center in the presidential race as the Democratic Party convention gets underway today. We're watching what's being said about taxes. And today, Vice President Harris said she would raise the corporate tax rate to 28% if she is elected president. The corporate tax rate has been 21% since 2018. This, by the way, would be the first hike in the corporate tax rate in more than 40 years. Earlier this year, President Biden proposed raising the corporate tax rate to an all-time high of 45%. Raising corporate tax rates would weigh, of course, on the market and overall net income. As the presidential race heats up, betting markets are active. President Trump has just tied his odds of winning the 2024 election with Vice President Harris, according to Polymarket. Last week, President Trump was down about 10 percentage points. The polls all over the place. Let's talk tax policy now with America's leading taxpayer advocate, Grover Norquist, the president of Americans for Tax Reform. Grover, thank you very much for taking the call this afternoon.
Absolutely. Good to be with you.
Likewise, thank you very much. And give us your impressions of the tax issue as we head to the presidential election.
Well, as the tax issue moves front and center, the spending issue and the inflation issue also, with the new idea, very old idea of Kamala Harris that we should have wage and price controls, something that's, I don't know, for 30 centuries has failed and caused all sorts of human misery. It does suggest that she intends to keep the spending going and therefore isn't willing to say she'll end inflation by spending less. She wants to keep spending. And of course, on taxes, when she talks about taking the corporate rate up to 28%, when it was brought down from 35 to 21, there was some broadening of the base, which means going back up to 28 would be a more expensive, more damaging corporate income tax than the one Trump inherited, okay? So it's not just going a little bit back on what Trump did, it's going way back to where Obama was and making life much more difficult. And of course, it makes every American company less competitive than China. Their top rate's 25 and 15 for their competitive markets.
And this is what they'll be trumpeting during the convention this week, right?
Yes. Well, higher taxes. They seem to think that the American people can be fooled into thinking that when the corporate income tax taxes a grocery store, that somehow the grocery store can print money and pay that tax. Of course, you and I pay that tax when we buy something at the grocery store, and workers end up with lower wages because 70% or more of the cost of most businesses is wages and salaries. And so when you take $1 million away from a company, 70% of that's coming out of people's wages. The corporate income tax is not free money. It's an attack on wages. And one of the reasons Trump and the Republicans moved to take that rate down was not only that they looked at all the other countries in Europe that had lower taxes. Now, so the United States, when we were at 35%, was the highest in the world of any significant country. Europe was around low 25, 24, 23. Our friends in Ireland are at 12.5, 8 to 9% in Hungary. So a lot of countries have much lower corporate income taxes, which makes them much more competitive. And for Kamala Harris to say, let's go back to a losing position is really kind of scary.
And indeed, President Trump has criticized what she's advocating as communist price control flat out that would lead to food shortages, rationing, hunger, and dramatically more inflation. According to the Financial Times, they also did a write-up saying Democrats rushed to defend Vice President Harris's newly unveiled economic plans amid criticism that they amounted to gimmicks that would fail to tackle inflation. So this is something that's going to be dissected this week.
The New York Times, the Washington Post, CNN, all criticized her, the idea of wage and price controls. If you put price controls on grocery stores, which is what she started with, the margin in a grocery store is 1 or 2%. They buy $100 worth of food and sell it for 101 or 102. They sell a lot of groceries to make money there. They don't have wild margins. I don't know what, that is going to come straight out of consumers and workers.
Give us the contrast here. Last poll I saw, President Trump still polling ahead of Harris on the economy. When she makes statements like this, where do you think this is going?
I think she's making a huge mistake. This by refocusing everybody on the inflation that she and Biden created, and the lousy when she says, "I'm not going to spend less, I'm not going to tax less, I'm going to set up wage and price controls." Because, of course, once you control prices, you have to control wages as well. Farmers will be in a very difficult position. I mean, this is back when the Romans did this. The cities would demand that the food be provided almost free, and the rural areas really took a hit. So this is a very bad economic policy, and most liberals know that. So she's really sort of stepped into it in a very odd way. I can't imagine who thought this was a smart move.
And it is to be noted, an analysis by the Nonpartisan Committee for a Responsible Federal Budget, the CRFB, found that Harris's plans would increase the federal budget deficits by $1.7 trillion over the next decade. Grover Norquist, wish we had more time, but we'll have to stop there. Thank you very much for joining us live here this afternoon.
Absolutely.
America's leading taxpayer advocate, Grover Norquist, president of Americans for Tax Reform. Mottek on Money, wrapping up here now with the Dow 237 points to kick off the new week. We're at 40,897, starting the week with a winner. The S&P 500 of 54, and the NASDAQ gained 245 points. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon. Mottek on Money, 790 KBC.
Are you tired of losing your fantasy football league year after year? Lindsey Rhodes, Emmy-winning sportscaster and football analyst, is your new secret weapon on the Believe Fantasy Football Show.
Watch the quarterbacks and his ADP. I think he has massive high-end upside.
Get expert analysis on player rankings.
Wide receiver 22 in fantasy, Cecil Shorts.
That kid can run, so I'm thinking he can have a breakout season this year.
And you can too by searching the Believe Fantasy Football Show. That's BLEAV wherever you listen.